You've seen the posts, a chart with a line on it. The caption says, Gamma marks the exact top. Right here, short it. You tried trading a few of those, some worked, plenty didn't. And you're left wondering, is the whole options flow thing even real? Or is it that you're just too dumb to use it? I'm going to give you the honest answer, the part that people selling you will not tell you about. And by the end, you're going to know exactly what this tool can do and what it was never meant to do. I've spent many years on this topic, and options flows never tells you which way the market's going to go. And I've tested it. Whether the price gets to the big options level and goes up from there or down from there is about as close to a coin flip as you can get. The structure doesn't lean for you. It just doesn't. So every time someone drew a line and told you Gamma says short here, they were dressing up a coin flip in a lab coat. When it worked, they posted it, and when it didn't, they went quiet. That's not an edge, and that's why those trades keep letting you down. It's not you, though. Every strategy ends up coming out to some form of 50-50, a coin flip, if you will. Options flow doesn't tell you which way, it tells you how much. It tells you the size of the day, the kind of day. Whether moves are going to be small and get pinned, or big and allowed to run. Whether levels are going to hold or get shoved through. That part's not a coin flip. That part shows up over and over again in the data. The structure sets the magnitude and the behavior for the day, even if it doesn't pick the direction. And that turns out to be more useful to know. Real quick, if you're finding this video useful, please like and subscribe for more content like this. It's the easiest way to keep these breakdowns coming. Now back to it. Here's why knowing size is more important than a directional guess in the first place. You can be right about the direction and still lose. Via execution. Via risk size. You get stopped out on the flush. You give back the winner reaching for the target. Direction alone doesn't save you from that. Size does. When you know the day is small and pinning, you trade smaller. You take profit fast. You fade the edges. When you know the day is big and running, you press. You hold, and you follow the breakout. The magnitude tells you how to size, how far to target, and whether to fade or follow. And that's the stuff that actually keeps the count alive. So here's how to actually use it, honestly. You let the options flow do the job it's good at doing. It sets the size for the day and the kind of day. Pin or run, small or big, hold or break. And you get your direction the normal way. From price, from your own read, from the trade in front of you. You stop asking the flow to pick your side and you start asking how hard to push and how far to reach. 2 jobs, 2 tools. This flows into my idea of a context, which would be the options flow. And then your strategy comes in and tells the risk and the control that you have. So let's be real. Stop paying for a crystal ball because there isn't one. Nobody has a line that's going to tell you the market's going to go up or down next. Anyone who says they do is selling you a coin flip in a nice font. And you need to start using the real tool for the real job. Size and behavior before the open. That's the honest edge. So when you look at tools like these, we need to be thinking in magnitude and size and context. And then your strategy is about your risk and your execution.